This is the video for Friday, January the 31st. And we're going to start off looking at FinViz as we always do. But at the very end of this, I'm going to add another stock, FSLY, that Andy is following and wants to take a look at. We'll do a look at tip ranks. We'll take a look at the chart. Take a look at some of the economic indicators for it. He certainly was right when he took a look at Shopify, SHOP. So let's pay attention to this one too. Look at the volume, extremely high, extremely high. So there's some commitment here to selling, but the question you have to ask yourself, is it long term or is it just something that was going to happen inevitably anyways? And I think it's a bit of both, but mainly the market was looking for a reason to pull back. They found one with the coronavirus, which is not to say it's not serious and it's not going to impact the economy, but will it have a long-term impact on the economy, particularly the American economy? I doubt it very much. And that's the way I'm going to play it. I'm going to be protected, as I've always been. I'm going to save cash, and I'm going to take advantage when I think I see a turnaround. And there may be a pop on Monday, and we'll see why in a second. Advancers led decliners by a huge number, but let's just look at the ones that are tracked by the McClellan oscillator. And we had 3,011 issues traded. Decliners led advancers by a huge number. I mean, there was only 611 advances. But the total volume, the declining volume was, wow, look at that. Advancing volume was 143,000. But that's pretty much like a week ago. We've seen this before, and we're going to see it again on the next chart, which is the breadth indicator, the McClellan oscillator, which has done something it hasn't done in a year. It's gone into the oversold area twice within the span of a week. Took a little bit longer here and didn't come quite all the way down. Same thing here. Here it took much longer. It took several weeks to do that, and that's not unusual. It does look like there were 2 days in a row here where it didn't move, so that's not the same as having overshot it, moved up, and now I have overshot it again. So we're oversold, and this inevitably always means there'll be someone in there to buy the dip on Monday morning. It doesn't mean that it's sustainable. So now let's look at some charts. This is the SPX, and I've added a couple of things to it. This is what we've been looking at, this AB, which was 608 points, you know, the way I drew it, down to C, which was a 38.2% pullback. And then we drew this one here, and we watched it as it came up. And let's see, this says 609. So 609, 608, close enough. Again, it's just the way I drew it. But we've hit that point. So now when AB equals CD, you know you're going to get a pullback. You know that there's sellers here and somebody's looking for a dip to buy. People have been talking about a 10% correction. Have we had a 10% correction? Well, we've had a 10% Fibonacci correction. We haven't had a 10% overall correction. That would be down 333 points. So it would take us down to 3036, which would be all the way down here. So that would be a 50% Fibonacci. So just for the sake of looking at the difference between a 10% Fibonacci retracement and a 10% overall retracement, they're not the same. So a 10% retracement could take us down to the 50% Fibonacci, and look at what is sitting there. The 200 simple moving average, and pretty well, and the 200 simple moving average is here, the 200 EMA is here. So could we go there? Yes, but we've been looking for a test of the cloud. Let's look for that test of the cloud happening this week. Maybe not Monday, but probably Tuesday or Wednesday. Is it time to buy SPY puts? I think the time to buy them was up here, not now. Now is the time to cover your stock with short calls, but only a week or 2 weeks out, and let's see what happens. Because that's what I've been doing. All my Apple stock and Caterpillar stock and AT&T stock is all covered with pretty much deep in the money calls. And my short Apple 210 calls are looking pretty good right now. And my 215 short calls are looking pretty good right now too. And the only thing that's left in them is time value. I'd like to explain it a little bit more, but that would be a whole other video. Look at the VIX. The VIX shot up. And we do have, and we talked about it, both of these indicators on their way up, which was warning us that the market was getting complacent. And these were going up. Now this fast-moving one started to turn down, but you can bet that next week it's going to continue its rise up to this, at least up to this red line, where it typically has come in the past. But we've got to look for this slow-moving one, which hasn't finished its move up, but has been doing it slowly since October the 31st. So the VIX is pretty high. Do we have a trend line here? I don't know if we want to bother with drawing trend lines on the VIX. But that's what it would look like, so we won't. Apple. This shows it was down $1.48 after hours, but you know that it's dropped a ton, right? We were at 321, 322. 323 was a full 100% extension of this line. So if we say this is A, this is B, it's not an A, B, C, D, but now we've gone back to A, and we have a new X, which is 200%. So that's the same Fibonacci rules that we always know about. When it hits these levels, there's always a pullback, and that's why I felt really good about having in-the-money calls. It buffered most of my losses, but in theory it buffered all of my losses on Friday. So I lost about $10,000 in stock value, but I made back over $6,000, close to $7,000 in short call volume. And that $3,000 difference isn't real, because some of these in-the-money calls, like the 315s, they're worthless now, but they're still trading for $5. That's $5 that belongs to me, and it's just time premium that is going to come my way eventually. I mean, frankly, if Apple goes down to 290, I have some 290, 300 calls. I'm just going to buy the stock at 290 and get rid of my calls. Amazon pulled back a little bit from this amazing run up. So on Monday, I'm going to close my 3 contracts that were 1900, 1910, which are well in the money right now, and probably by Monday they'll have 90% of their value. So I'll take it. This is a red candle. This is a red volume bar, but this is buying, right? This is obviously buying. Look at the huge gap that it's created. It's going to take a long time to fill that gap, but there is a gap down here where if the coronavirus continues, and remember, a lot of Amazon stuff comes from China, whether it's direct China vendors or it's products made in China. So we really want to put a line here, a support zone here, and we're going to take a look at this. Oops, it's this one right here actually. At this gap as something that will be potentially attractive to traders. And it means that it's likely to get a bounce here at 1974, but it also could eventually come down and fill that gap and be satisfied and not necessarily have to fill this big gap. So that's what we're going to look at. Caterpillar had a pretty ugly day, and that was because it had earnings on Friday morning and it dropped right away. We said to watch the Chiku span and the cloud. We did. And at one point it was holding the cloud, and the 200 SMA is at the same point. It held it for quite a while during the day, and it just lost it. So there's more bad news for Caterpillar potentially coming. Again, I've got the 135 short calls, which aren't as protective anymore as they were at 140 and 135. But frankly, this is just an opportunity to buy Caterpillar when the technicals get a little bit better. We also have this trend line that we want to keep an eye on. It can now possibly become support, and that trend line goes back all the way to January 2018. So 2 years. It's questionable where you draw that trend line. I mean, you could draw it here, right? And then we've already surpassed that. But I've always had it more like here, so that I could get these points, that point, this point, and this point. Home Depot, I mean, it's going to be affected by the coronavirus. If people stay home and don't go out shopping, then your retailers are going to hurt. Now, that's not happening yet. We've only got 7 confirmed cases in the United States, so nobody's staying home as a result of the coronavirus. People may not be attending any Asian festivals, but they're still going out to Italian restaurants. Chinese restaurants might be hurting. You know how the American people are a little bit superstitious. Shopify had a nice little pullback. I'm still excited about 212 earnings. I still only have the 3 contracts. I didn't add to it. This is an engulfing candle, and it engulfed previous 2 days. So we're also coming down to the 138.2%. We never made the 168.1. So we've still got an opportunity to hit that 496 before we hit a pullback. So watch Shopify, Canadian company that helps people get set up to create an online store and collect money. AT&T, nice little bounce back in times of distress like this. People are going to pour their stock, pour their money into something that earns a dividend, and 5.6% is quite attractive. Plus the 200 acted as support for AT&T. Look at the volume. Both volumes show a little bit of institutional buying there for those last 2 days. In fact, 3 days we've had institutional investors. Tesla, I mean, after their earnings, it's going to take quite a lot to drop this. Now, of course, they opened their big plant in China. Apple closed all of their stores and offices. They haven't closed their manufacturing in China, but that may just be a matter of time before, for the sake of the safety of their workers, they close their manufacturing, and that's what the market is thinking. Do you think that that's going to hurt Apple long term? How many people are going to not buy an iPhone and buy an Android? I don't know. I just don't think that that's going to hurt Apple in the long term. Certainly, I'm holding on to my stock. WDC, substantial drop. Whirlpool, quite a drop, but look at that, support right on the 200. That's very important. That could be a really interesting pullback, and it might be an opportunity to get involved in some calls or call spreads in Whirlpool. So let's take a look at that, and let's just set an alert here so that we're reminded that if we have an up day on Monday, we might want to buy some longer term call spreads that get us beyond the time frame when we think the coronavirus is going to hurt. Whirlpool's products are primarily made in the United States, but it wouldn't surprise me if a lot of their parts that they assemble in the United States came from China. So now we're going to look at Andy's stock, which is Fastly. The first thing we'll do is we'll go and look at a little bit about the company. The name of the company is Fastly. It's traded on the New York Stock Exchange. This has been its chart trend for just Friday. But look at that. When the market was dropping all day long, Fastly did not drop. It just sort of stayed steady after a little bit of pullback around 10 a.m. So if you go to Yahoo, you can find out a lot about Fastly. You can go into conversations and see what people are talking about. I don't put a lot of stake in what people say when I don't know who they are. So let's talk about who we do know. And this is wrong here on tip ranks, where they've got 1 buy recommendation, no holds and no sells. We've actually got 4 buy recommendations, but they're all targeting an area that we're approaching right now, and they're all fairly old. So we want to wait and see, or we want to see if there's going to be any new analysts coming out and talking about it. So the most recent was James Fish from Piper Sandler. But let's look at William Power, who's a 5-star, and he says it's going to 28. So he is really number 121 out of almost 6,000 analysts. Huge success rate. Let's compare him to the S&P 500. He's still got an average return of 1 year of 13% with a success rate of 56%. And over 2 years, he's almost up at 20%. So he's a pretty good analyst. He's saying to buy Apple. He sees the stock at 360. Where is FSLY? Let's go back and let's look at his FSLY. I guess we can't see it here. We got to go to William Power. Let's see what he says about FSLY. There it is right there. But that's 6 months ago, and he's only rated it twice. And he said to buy it back here. There was a pullback. It pulled back even further, and he said to buy it again. And he was absolutely right. If you were buying it at that time, you made some nice money. It went from $17 to $34. But both of his call, this one is not in the money anymore, but this one is in the money. So it's not bad. So let's take a look at the technicals, which is what we like to look at. And here's FSLY. So I've drawn Fibonacci's from here to here. And it's really interesting because it's a great Fibonacci stock. Now this is a volume profile. This shows that most of the buying and the selling, 70% of it, was between the 78.6% Fibonacci and the 50% Fibonacci. So how good is this Fibonacci? Well, let's go backwards and see how historically accurate it was in predicting this move up. We have a bit of playing here at the 61.8. That's your golden ratio. 50%, 61.8. A lot of playing around the 61.8, back to 50%, down to 38.2. So these are before this is historical data before we even drew the Fibonacci. So now we draw the Fibonacci, and we see the first pullback come to 68.1%. Return to 38.2. Come back to 68.1. Struggle with the 8 EMA. Go down to 78.6. Back up to not quite 68.1. Runs out of steam, comes down, looks for more support at 78.6, up to 68.1, up to 50%, down to 78.6. Struggled at 61.8, struggled at 50, now it's down at 61.8%. If we have an up day on Monday, go ahead and nibble on this. It's only a $25 stock. Don't bother with, it may not even have options. Buy the stock and sell 30 calls to reduce your price on the stock if you'd like, because it's going to have a tough time getting to 30. You probably won't get very much for a 30 if it even has 30 options. I didn't even look at see if it has options. But let's look at the SMIs. The longer term one still shows that it's got some room to move upwards. Let's watch this one and see if we have a change in the short term, or if it's going to go down and bottom out. If it bottoms out here where the fast moving stochastic is in the oversold area, jump on it. The blue line could return up to overbought, and it could stay there for as much as a month, maybe longer. So it looks like, I don't know what FSLY does. This is a long video now, so I'm going to stop. But go ahead and look at what FSLY does and see how much of their business or their product is dependent on China, please.